Adem, welcome back. How are you, my trading warrior brother?
Hey, gentlemen, how you doing?
How do you know I'm a gentleman?
Well, I could just imagine
Huh?
you guys as
I, huh?
it's always just,
What do you think? I
Blake keeps
open
good
doors?
company.
Think I open doors and do that kind of thing for women? Yeah, well, I do. Okay,
Yeah, I was
so
gonna say you
Hey,
would.
hey, wait. Real
uh,
quick. Good morning, Adam. How are you?
Doing good, Blake. How have you been?
Good. Hey, so this is a big discussion, a big talking point right now. Do we call you Adam or Adam?
Adem,
I
It's
know
it's
I
Adam.
and I'm
is it
lazy and
Adam?
I'm a lazy
Okay,
American.
Yeah,
I'm
it's
just gonna say
Adam.
Adam.
Yeah,
But
no, it's actually Adem, but um
Adem. Okay,
yeah, but that's just with Turkish accent. Otherwise, just Adam's fine.
there
okay.
we go. There we go.
All right,
All
all
right.
right.
So I'm gonna try to be proper next time, and
Call
I'm
you
gonna say
anything, but just call you.
just call me,
Right.
maybe. All right. All right. I'll let you guys be. Thanks for being here, Adam.
All
Adam.
right. All
All
right,
right.
Yeah, it's
buddy.
always a
So
pleasure, guys.
last time we talked, you were thinking about taking a flyer on the short side of semiconductors. NVIDIA would have worked pretty good.
Yeah,
Did you do it?
I did the SMH.
Okay.
The
And it's working.
yeah, it's working. It could be better. I still think semiconductors are going to face some trouble.
Okay, so I think you've been on Trader Summit for an interview, and you're moving your focus to China. Before we get into it, give us a why. You think as China goes, so goes the rest of the world?
It's it's not so much what that it brings down the rest of the world. The big issue that I think is with China is that now that it's become clear, and I know you and I have talked about this and for like over a year ago, is that China's economy was always very imbalanced. They have an extremely low share of consumption to GDP. It's not even in the top like 18 countries, and it's the second largest economy. I think it's like 54% of their economy is consumption. And the rest of it is investment and
Yeah.
net exports. And the issue with it is that you cannot escape the laws of diminishing returns. And they ran into this problem essentially after 2008, where everything was slowing and the Beijing wanted to hit these lofty growth targets. The thing is, if your real economy can't justify that growth, you need to pump credit and infrastructure spending into the system. And it's the same
Right.
thing with the US. Like we depend heavily on consumer debt and consumption, but at least wages in the US rise relatively higher than most places in the world in real terms. In
They,
China, they're very anemic, so they don't
yeah.
have that spending power.
Okay. They say that I don't know, populate work the pop working population in the 20s. If the numbers were correct, half of them are unemployed.
Oh yeah, the youth unemployment numbers in China, they stopped posting it like a month
Yeah.
or two ago, but yeah, there was a university that said if they did the exact same metric that how the US labels unemployment, uh, it would be like 45%,
Wow.
which is worse than like the pig nations.
Yeah. Okay. So that gives you plenty of recruits for the army to go and,
Yeah,
stand guard in Taiwan.
I'd be curious because of China's one child policy. A lot of the children there grew up very spoiled. So
Okay.
I would be very interested if they actually had to, have a humbling effect of joining the military.
Yeah. And well, they can't find wives. They would
Yes.
abort
Yeah.
the female. So a lot of these guys probably pretty frustrated.
Yeah.
Um,
And like wedding dowries to get a wife are like
yeah.
bankrupting some families in the rural areas.
Well, they're the opposite of the U.S. The bankrupting comes after the marriage here.
I know, right? Yeah, the US does whatever it can to
You go bankrupt right into it.
yeah.
Okay. Anyway, so what else are you thinking about in China? And it's a fact. Is it possible, Adem, and I've thought about this, that with Xi, his number one priority is national security over the economy, and that everyone wants them to break out their bazookas again, and they're doing little tweaks here and there, that you know their population could handle a poor economy better than the West, and they know that if they're not uh, pumping things up like they did in 08, 09 and pulled the world out of that recession, they'd be willing to take a hit to drive Western economies down.
I think they, I mean, it's possible, but I think they would have to do some serious reforms in China, like allow the household share of GDP to start increasing, put some social safety nets, run bigger deficits to try to get their growth going, to subsidize it, which is kind of what we've seen yesterday or last night when they announced that they're going to raise their mid-year budget by 0.8%. And just for the record, they've only ever adjusted it higher. I think the 1990s Asian contagion crisis,
Oh
the
yeah, currency.
Sichuan,
Yeah.
yeah, the Sichuan disaster, I think it was an earthquake, and 2008. Those are the only three times that they've ever mid-year come out and said, like, we're going to raise our deficit uh, spending. And I think it's interesting they're doing it now. But but when you look into the details of what they're doing it on, it's just more infrastructure. They're like going to go rebuild like water, like dams and water conservation and disaster hit cities. So it's just more, so they don't want to deal with the painful reforms that they have to do, because to rebalance their economy, you would essentially means that their investment share of GDP would have to decline, and then the consumption share would go up. And it sounds easier said than done, because in the short term, then local governments are screwed. Infrastructure spending, exports would be screwed. You'd have to have the yuan appreciate significantly, because a stronger yuan means more imports, which is enriching the middle class, but obviously then it's going to affect their exports. And I don't see China wanting to go that route, or clearly they haven't. Japan didn't either. Uh, Brazil in the 70s, 80s didn't do it either. And I think it's very politically difficult for them to try to manufacture that. So if this was like 10 years ago, post 08, I could see China being in a much better position. But now, like since 2008, Chinese household debt to GDP has risen. It's over 60%. It's gone up from, it was like high teens in 2008, 9. Now it's 64%. I mean, to put that in context, it took the US about 50 years to get to, from post World War II of like 15% to around 60, 65%. It peaked in 08 at like 110, 120, but still, it still took like 50 years. China like crammed the household, mainly with speculative housing debt, in, put them under a huge amount of leverage. Now they're having their property prices fall, and it's just burying them in debt. And then you have like Country Garden and Evergrande. It's Evergrande. I call it Levergrande though. They have 500 billion in combined liabilities. Just those two companies, and they're both out of cash basically. And that's more than like Turkey's entire public debt. That's more than like Austria's public debt. That's more than like most emerging markets' debts total. And it's just crazy. That's two private companies in China.
Okay, so what's actionable about having these insights?
So as a contrarian, I could see it being like interesting looking at China now. I mean, it looks like Beijing is getting serious to step up the floor. And even though they're choosing stimulus over reform, that's still, it could give some confidence to the equities or so forth. I'm not there. Like, I don't like China's economy. I just don't think they have any real potential growth going forward. as is. But that doesn't mean like equities can't rally. So I would be looking at maybe just as a contrarian, maybe long China positions is something to like keep an eye on.
Like
I mean
FXI, just a general one,
yeah, there's
FXI.
FXI, there's the MSCI one. I forget the name. It
Yeah.
starts with
How
it
about the
starts with an A.
currency itself? It's on not that far away from making new
Yeah,
lows against the dollar. Could
yeah.
there be, if the dollar is peaking in general with one more leg, maybe 109, uh, could being long the yuan be a kind of a contrarian trade now? Do you
It
think it could pay off?
I mean, it could. Definitely the rate spreads are hurting China, but
Yeah,
I think the big issue, what's really hurting China, the yuan right now, which is their central bank is easing, essentially. They're trying to ease because they're in a slower patch. And by them easing, obviously it's widening the spread because they're cutting interest rates while the US has been rising interest rates. They're like one of the only countries that are really cutting or had really cut. And it just
right.
battered the yuan. I mean, I think they saw like biggest outflows of investors, like money in banks that were transferred out from the onshore to the offshore market. It was the highest it's been since China's shock devaluation in 2015, late 2015. And I think China, they're going to keep feeling pressure on the yuan, uh, all else equal. But I think what's really worrying is because I've seen some analysts are like, oh, China needs to repeg to like 8.25 to
Wow.
promote exports. Yeah, and I just and like I get
I
why
know
they would
that's a
say
big
that.
worry for some people is that they just let it go.
Oh yeah, I
And
mean, so that's what China, yeah,
that would
that's what
be
they
letting
don't
it
want.
go over
That would be
eight.
letting it go. And I agree. And that's why they're spending so much time. Because, I mean, as you know, you're a currency trader. Like, there's those psychological, like, anchoring biases. Like, if you know what I mean, like, you get used to the band, or like you go, oh, it won't go below this, or it could go below this, or they'll step in. Because once a currency starts dropping, that can become a really bad amplifying feedback loop. And
Yeah,
China, same with Japan and the yen, they kind of put like 150 as that like anchoring effect, like letting
right.
people know, like, hey, we won't let it like run, apparently, or we'll do what we can to protect it at these prices. Because if they do let it run, then you have, massive capital outflows that could completely screw with, their banking, financial plumbing, forex market, FDI, foreign direct investment, and but but the thing is with China, if they want to slowly creep it weaker, like steadily, so instead of it just going right to 825,
Yeah.
they've talked about that, but I think China's aware of it. They're like, they must know behind closed doors that the weaker their yuan gets, the more expensive imports will become. So it'll help their exports, but their imports will get worse, and that's China's problem. They already have weak consumption. It's not really the exports that are the issue. I mean that's also declining, but imports are declining faster, and that's what China's kind of worried about. They're like, well, we can't let the yuan go too low or crash too much because then that'll really curb domestic demand.
Okay. So the elephant in the room is what's happened in the Middle East over the last 3 weeks. And I know you're a voracious student of financial history and history. And do you have any ideas about, what the end game could be for markets, parallels to the past of um, how, if not to position yourself, how not to get run over by a geopolitical event? You have any thoughts on this recent new uh, turmoil that we have in the world?
Yeah, I mean, things are getting really I mean, that whole area has always been a powder keg. I thought these kind of, unfortunately, I mean, it was inevitable. The resentment, years of generational hatred, government biases, etc. I mean, it's just all fed on itself for so long that
How about
it
thousands
was,
of years? You know, the
yeah, thousands.
Philistines. The
Yeah, right.
Philistines, that's where the word Palestinian comes from, Philistine.
Right. Yeah, you have multiple groups. I mean, then you have religion involved, then you have
Yeah.
nationalistic. I mean, the whole thing was just a powder keg, and it was a big black swan lurking around the corner. We didn't know when it would happen, but now it's happening. And I think, yeah, I mean, there could be a lot of turmoil. The shekel, the Israeli shekel, has been battered over the last, even before the invasion. It's been, I mean, obviously every currency to the dollar was getting battered, but the the main thing with Israel and that I think it depends if the war. So we know that the U.S. has been buying Israeli bonds. Like a lot of wealth managers in the U.S. are like, oh, we think Israel's long-term prospects and growth are attractive. They run a current account surplus, blah blah blah. We're buying their bonds now. Maybe they're just buying it, like the U.S. was
For a
selling
trade.
Liberty bonds, yeah, to trade and also to finance
Oh, I
them and
see.
keep their interest rates low because after the war was announced, the shekel like plunged,
How
and
much?
I'm not sure how much,
Like
but it had
10%, 5%?
it
That'd be
must have been
big.
over five. It must have been over five within that
Okay.
after October 10th, 11th, and then
Okay.
when I was looking at it last, and then but yeah, it's been on a slow decline for the last year, but that was like a very noticeable drop. And I think it just depends if they can do this fast. I think people are I mean, they always end up underestimating how long these things take, right? Like Iraq War, Afghanistan,
Yeah.
like something that was easy lasted almost 2 decades, or yeah, 2 decades. Ukraine, Russia, same thing. Everyone thought it would be over fast. Now it's just a war of attrition. And on the economic side, I mean, yeah, this is I'm not for it, but wartime spending kicks in and that fuels demand somewhere, right? Like it takes a lot of money to run military. You're paying out families, you're buying equipment, you're doing government contracts. So I think there are some benefits, but I think I mean, the US GDP is almost like doubled from that. I'm sorry, deficit at this point is already almost doubled from last year. It's what almost near 2 trillion at this point. It's like 1.7 ish. And I think, we have an election year in the US, which probably the government's gonna run bigger deficits. And I think that's where we're seeing a lot of the hotter growth come in from over the last quarter, is just the US deficit. Because when the US spends, or when your government spends, it's creating a net private asset. They're spending, they're putting that money that they just create or essentially borrow from the banks or investors, and then they're just putting that money where they want it. So instead of being parked in savings and someone's not spending it, they're like, hey, I want yield. I'm going to buy a bond. I wasn't doing anything with this money. Now the government gets it, and then they could go, hey, here's your social security. Hey, here's your government subsidy. Hey, here's your whatever government project. Then they pay their employees, right? They just add that money into their bank account. And then that individual goes home and he's like, cool, I'm going to go buy a TV or etc. So it becomes a net private sector asset. The problem is if you create too much, and that's like the predominant theory of how the governments run big deficits, it's because if you're creating more essentially buying power by putting more money in the economy and the good amount, like supply is fixed, or let's just say that it's not as elastic, it's not as elastic, or it's inelastic, then the then you have prices start rising because you're having more of these financial assets, dollars, competing for the same goods. So I think a lot of the growth we've seen isn't from the private economy in the US. I think it's just because the US government's running, or I should rather say, it's no surprise that the US GDP has been heating up. At the same time, US deficits have also heated up.
Could you think that the bond market has received enough bad press and horror stories and sovereign debt crisis to be a contrarian trade, TLT-ish?
Oh yeah. Yeah, I mean I've gotten my face ripped off on long bonds this year, but I just think that I'd rather hold it, collect the yield. Granted, it's like 1.5 ish plus 2 percentage points below money market. But the thing that the bonds give you is because once the money market rate I mean, yes, the rate's higher, but once inevitably the Fed starts cutting, it may not be tomorrow, it may not be next year, but eventually they're going to do it. And I think when you have the bonds, you can also get that capital appreciation from it. So
Yeah.
not only are you locking in that yield for the duration, but then also when they cut rates, you will make a profit. Whereas with a money market fund, like you're getting that high yield, but once they cut, you know what I
There's no
mean? The next
capital
day it's
gain.
gonna drop. Exactly, it's
Yeah.
gone. Like, and then you have to sit there and figure out like, oh shit, like, or I'm sorry, excuse my language, but they're like, oh, I gotta figure out what to do now. And then, then they have money will
Yeah.
probably chase into bonds trying to lock in that yield. So
Yeah.
the US yield curves had a huge bear steepener recently, and
Yeah.
I think that's I mean, historically, that's the
Call
worry
signal.
because now, yeah, that's the bear signal in my opinion because it's bull, but yeah, bull signal for
Bear for
bonds, but
equities,
yeah,
bullish
bear
for
for equities
bonds.
and yeah,
Okay.
historically, yeah, because now that tightening is because when the Fed started hiking and they inverted the yield curve and the curve is still inverted, but
Yes. Yeah.
when they
Not
were
as
when they
much.
essentially inverted the yield curve, it didn't really tighten financial conditions because the long end of the curve stayed low, and long end is what the banks control and what they
Right.
lend at.
Right.
So now that you're seeing, I think a bear steepener, to the best of my knowledge, if I remember right, it's when you have the long end rise over 50 basis points within like a month, like a very sudden sharp move up. And I think the 2 and 10 has steepened in the last 30 days around 60 plus
So
points.
qualifies.
Yeah, so it qualifies as a bear steepener. And I think that so finally the Fed is getting that tightening. And I think historically when people say, oh, the yield curve is inverted, it comes with a lag. And I think this is because of that lag. Because when the yield curve inverts, you have to start slowing borrowing, and then the long end starts rising, whether from investors just shedding bonds generally, which is what's happening. U.S. supply of bonds is increasing because of their bigger deficits, fiscal outlooks, whatever the issue is.
Yeah.
And
Sounds like
then,
every reason not to buy a bond.
yeah, duh, yeah, that's usually how it is, right? They get to the
Right.
extremes, and then, but I think the U.S.'s bond bear market is the worst one currently in the last 200 years that
Yeah.
they've even like compiled the data. And I think as a contrarian, yeah, that makes it attractive.
Okay. Because I could just well, you're up there. So wrap it with me. Any new positions that you're putting on? Would you try the TLT again down here? Would you, do anything with the yuan or the dollar or gold? Are you impressed with this gold move? You think this is the beginning of a huge bull market, a huge wave in gold, or is it another head fake?
Yeah, I've liked gold for a while actually
Okay.
since
All right.
since I started really doing like investing in 2014. It
Okay.
got battered back then, but as a contrarian, I was like the supply fundamentals of it, everything looked, intriguing. Same with palladium and platinum back then.
Yeah.
So now I think it, the thing is, gold has held up very well in a
Yeah.
rising rate environment. And
Yeah.
to me, it creates more asymmetry because if it was able to keep itself sustained while rates were rising, I'm
With a
assuming,
headwind. Yeah.
yeah, yeah, I'm assuming it'll have a huge tailwind once rates come down eventually. And also, you have rampant central bank demand for gold. I mean,
Yeah.
the US. I mean, they're especially China, like they're running a huge current account surplus. They may be trying to run a fiscal deficit right now, but that's different than their trade surplus, their current account surplus, and they're diversifying those dollars. I mean, their dollar is rising fast too, but they're also allocating some of that to gold. And I think we're seeing countries do that, trying to just park some of these reserves somewhere. And not only that, but there's been major gold consolidation in post 2018 when like the big gold companies after the
Oh
bear
yeah,
market and gold,
they bought them up, the little
yeah,
companies.
so you're creating like oligopolies in gold mining, which can essentially control more of the supply. We've seen gold production drop the last 3 years post COVID, or it peaked in 2019, and then the supply, the output, net output from the data we can see has been declining. So that's usually a good sign because the supply is going. I mean, we saw it in uranium, and I mean that was
Yeah,
one of
well,
my favorite
the
things.
uranium, that was really a dynamic move. I think if the market washes out, you should be buying the breaks in uranium, don't you think?
Oh yeah, yeah. I mean, well, I've been like a long-term investor in uranium because of, but I agree, like for short term, like yeah, that would be the way to do it, just because, even after, like, to put it in context, after Fukushima happened, the disaster, the tsunami,
Right,
the demand for uranium plunged, but at the same
right,
exact time, uranium production rose year over year at around like 10-15%, all the way up until 2017. Like it literally kept rising. So they were overproducing into a glut while demand was weak until finally, because it just shows how difficult it is. I mean, these companies can't just turn off supply. You
yeah,
spend, right? You're like spending billions to build a new property. You're trying to wait out your competitors at this point until finally the marginal player. And we kind of saw it with oil recently, but
yeah,
Saudi Arabia doing cuts. We saw Kazakhstan, which controls all, like, essentially 50% of the world's uranium output in 2017-18. They were like, you know what, we're slashing output. So it's like you had the big boys throw in the side, throw in the towel, and
yeah.
then we saw uranium bottom. Then we saw it start rallying because the supply side started contracting rapidly as demand picked up. And I think, we saw it in oil recently too. Usually, I don't focus on demand numbers because they're too low. I mean, one, it's really difficult to forecast demand, and two, supply, I think, matters more because if you take away the supply, like in oil, they
Yeah,
start cutting supply, boom, oil price rips. After it comes with a lag. Obviously, there's time lags,
right,
but I think
right.
gold. Sorry, to the original point, yes, gold had uh, a good run. Now there's diminishing gold deposits even being discovered anymore. So I do think gold supply side alone makes it attractive.
Okay, two questions to wrap it with. Will the Diamondbacks win the World Series? And will ASU win at least one more game this year? Will they win a
You know,
game this year?
I don't know. I don't watch college football, but
Okay,
that is my state's football
all right.
team, premier
And
football
how
teams.
about the Diamondbacks?
Yeah, I mean, they won it when I was in fourth grade or something. Yeah,
Oh,
fourth grade.
yeah.
back
All
in
right.
yeah, back in '01, I believe, and against uh the Yankees. So
Oh,
yeah,
all
I,
right.
I I could see them doing it again.
All right. Well, call your bookie. And thanks for dropping in. Thanks for being part of the team.
Yeah,
And
I appreciate you guys having me on.
yeah, so Adem, good hunting on whatever you do, contrarian. Best trade between now and say the end of the year.
Ooh, I don't know. I
That's too short term for you, isn't it?
Yeah, I don't, yeah, sorry guys, I don't have
Okay.
anything for you.
All right. Okay. Well, thanks for filling us in on what you thought of China and what you're thinking about the war and everything. So appreciate your time, buddy. Thank you. And you could follow
Yeah, I appreciate
Adem
you
at
too, sir.
yeah, follow Adem at Radical Adem on Twitter at Radical Adem, and there's a lot of interesting posts he puts up. So uh, follow the thinker, Adem the thinker, and that's going to be a
Ah,
wrap for
flatter
us
me.
today. What, buddy?
I said you flatter me.
All right, well, put on your thinking cap like Tom Terrific, and if you don't know who he was, Google it and you'll laugh. Tom Terrific.
I'm
And
terrific. I'll
that's
check
a
it out.
all right. You could join the team in 13 minutes on the morning edge. Good luck the rest of the day, everyone. And don't just count your pips, count your blessings. See you tomorrow. Adios. Thanks again, Adem.
Hey traders, this is Blake Morrow with Forex Analytics. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.